From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Good afternoon. This is, of course, the COB, the stuff you need to know about the day in business and markets. I'm Carl Rodder and Danny Akiye. Danny, interesting day. I don't know if we've had a look at volumes, but I dare say probably a little light. And it's been a pretty flat end to the day's trade. We'll get the CBO 200 up. I think that's slightly higher, but the ASX 200 basically where it was where it started the session.
Flat as a tack. Might almost say it's a little bit on life support at the moment. Yeah, I mean, really, there was, when I checked in earlier, and I'm just going to check in again, let's just have a look at how some of the sectors performed. It is all in the materials. So we are talking the big miners, BHP up about 1.4%. Fortescue didn't find the love. Some of the lithium players, Pilbara still on a run, up about 3.5%. And the gold miners also running. So I think people were looking for something to do while they wait for those US earnings numbers. And I suppose it made sense after the China GDP. Let's go back to resources. Let's go back to our favourite Aussie plays.
Yeah, we of course had a great discussion yesterday with a few people about that Chinese data, and maybe it is working its way through our mining sector, because effectively I think if it weren't for the materials pushing higher, and this might take us to our three themes, I suppose, if it weren't for the miners, broadly speaking, we wouldn't be, well, we'd be negative for the session.
Absolutely. There was no love for the other sectors today. If I just have a quick peek here. Consumer discretionary down about 1.2%. Yeah, but let's run through some of those metals and miners. They've all been firmer.
Yeah, they have been. And getting on to the three themes here, China, it seems to be the story today. And what we're really focusing on locally as well, with those better than expected GDP figures still, I guess, being digested by the market. But I thought I'd truck in subtly. It's hard to put italics into the system, so it's hard to communicate this here. But could we be any more bearish? We wanted to talk about that Bank of America survey, which, I mean, pointed to the fact that cash levels are as high as they've been, I think, since the GFC was the date. And the allocation to bonds versus equity is also really high. So maybe a contrarian signal there.
Well, maybe is it, everyone's so bearish it's bullish, but really, we kind of go around in a little bit circle there, don't we, in terms of I was just speaking to somebody about the mighty US bond market, and they are looking at something potentially happening down the track. So it's really interesting at the moment. We really are on that tightrope. The tug of war continues to go on. Who is right? Yeah,
and I just thought I'd put in there too, rolling with the punches, more speaking about the US markets, which saw the VIX drop to 16 in the last few days. There's lots of
complacency.
Yeah, that seems to be the word. There's lots of technical reasons that could be occurring that, maybe makes this sort of situation slightly unique. But I mean,
you've seen. I was just going to say, just on that, because the MOVE index, the bond MOVE index for volatility, has also come down. So you're kind of seeing a backing up of yields going on. So a lot of that uncertainty and risk off that came through with the banking collapse is sort of backing out of the markets at the moment with those US bank earnings. But there's a lot of people saying out there that we're not through the worst, and so it could be just markets doing what markets do, which is basically the overreact to the downside, and they're just coming back the other side.
Yeah.
So kind of how I'm reading it.
Of course, and we're a few days away where we can just start rabbiting on about Sully May and go away, and we'll see if that happens to hold true as well.
Hopefully we don't rabbit. Hopefully we've developed a better discourse than rabbits.
Well, you do. I can only promise rabbiting. But let's get to some of the local news on the corporate front, because AMP said its net cash outflows for its flagship Australian wealth management business were 30% lower in Q1, while the banking unit's credit quality remained strong. AMP Bank's loan book grew compared with the last quarter, while lending margins were largely in line with a year ago. Momentum in loan applications was improving despite higher interest rates in the country. Transurban has also announced that its financing vehicle has priced €650 million of secured 10-year notes in the Eurobond market. All proceeds will be swapped into Aussie dollars and will be used to finance its development pipeline and other corporate purposes. And in maybe the news of the day too, Danny, Star Entertainment has said it's
Yes.
experiencing a significant and rapid deterioration in operating conditions, particularly at the Star Sydney and the Star Gold Coast, pointing to potential layoffs going forward and signalling perhaps that the demand or consumer discretionary spending is being hit reasonably hard, and that's going to have an impact on earnings going forward. So, I don't know.
Just before we go there, just really quickly, the British consumer, the CPI has come out. It fell to 10.1% from 10.4%, which probably, given that they're expecting 9.8% in March, probably the markets will be a little bit disappointed with that one. But yeah, let's move on to stock of the day, because it was really exciting in the call, apart from me mispronouncing a company, which was rather embarrassing. But we had Telix Pharmaceuticals as the stock of the day, Henry Jennings and Andrew, and I've forgotten how to pronounce Wyland.
Well,
thank you.
Violence.
Violence. I got it right. Yes, Violence. Yeah, both really like Telix Pharmaceuticals, 2 buys, so a double buy, as Nadine likes to say, and a company that is really putting the runs on the board in terms of generating cash flows. Their products are working, they've got that contract recently over in the US, so a double buy on Telix, and it was one of the top performers today.
It is pricey. It's undoubtedly pricey, but it's got lots of momentum, lots of good news. I like it. Why don't we start on a positive note? Why don't we say it's a positive?
I think we're going to. I mean, this to me is, I kind of call them penguin stocks, and I know that's a bit weird, but there comes a time when all the penguins are on the ice floe, and then you get one that jumps in the water, and then everybody jumps afterwards. And we see that a lot with medical device companies, biotech companies. Once you get some traction, once the first penguin jumps, the other penguins follow. These guys have had lots of penguins jumping. The revenue's doing pretty well. They've got a nice build up of cash. Stock price is doing well. When you get it right in biotech land.
There you go, a lesson in investing and perhaps zoology there as well from Henry Jennings, that has to be said. But let's talk about your view, Danny. Obviously, penned it again today. What do you have for us?
Yeah, so basically I just gave the case for the Bulls and the Bears, and I thought it was about time to try and draw a line in the sand and say this is what the Bulls are looking for, and the Bears are getting really frustrated, and investors who are sitting on the bearish side are probably getting really frustrated. So just a little summary there, that Canadian CPI number was actually really, really good, and that would be lending some support to some of those bulls, the inflation narrative, inflation coming down, and we're really close to the end of the hiking cycle. But yeah, so you'll have to read the view.
As always, tuck into that. But let's get to our guest for the COB today. Mark Gardner from Macro Capital joins us now.
Good afternoon,
Mark,
guys.
good to see you. These sorts of flat markets, I guess it's tempting to start getting sort of itchy fingers. What are you doing at the moment? Just trying to sit to the sidelines, wait until this kind of I guess lackluster sort of performance perhaps plays out? How do you go?
There's the Bulls and the Bears and the board, basically. And I'm in
The 3 Bs.
I'm in the third category. Look, we took up a fairly decent sized allocation in some high yield corporate bonds, getting paid to sit in the sidelines at the moment, which is keeping my itchy trigger finger safely in my pocket instead of trying to chase and that feeling of FOMO and buying here at highs. So, these sort of periods, we've had 18 months or more of fairly elevated volatility. So, it's actually to utilise your time to maybe go and look, have a shopping list for both scenarios. If we do get the softest of landings and the bull case is correct, well, go and put a scenario in place and choose some stocks that you might want to be on in that case, and vice versa. Obviously, if we get the reverse and we start to see the sell in May sort of pattern pan out, well, have if you're sitting in cash, have a shopping list and make sure that you're you're behaving rationally when the markets get really erratic again. So, and that's sort of what we're doing, using our time at the moment. We've got fairly high cash balances, but there's still opportunities out there to pick up laggards if we extend this rally. Conversely, there's a whole heap of really good companies that we'd like to be getting, at low PEs and cheap prices, for like long term for the portfolios.
Yeah, so you've got a couple of stocks there for us, don't you, Mark?
Yeah,
in terms of the shopping list.
In terms of the shopping list, well, with Tesla out tonight, they've obviously cut their prices 5 times this year. There's going to be really close focus on the margins and whether they've achieved those economies of scale.
Do you like Tesla? Is this one of the stocks that if it really had like a 20% pullback off the back of these results, which is not unreasonable, it can be very volatile, would you be dipping your toe into that?
Look, I wouldn't bet against Elon Musk. I know he's not particularly popular, but he's largely revolutionised about 3 industries now in his lifetime. So, I think tonight, obviously, the improved, economics of the business, or if they've improved, will be the big deciding factor. Obviously, people love to hate Elon, so the people will probably revel in any bad result. But if they have managed to, bring those prices down, and it hasn't affected margins and things, well, we could get a really good result. So, but largely they've had a couple of some announcements around batteries and things, and I just sort of got a few buys, a large cap, a medium cap, and an upcoming IPO in the battery minerals space. So obviously we've, the lithium space particularly, there's a lot of analyst views and it flows back and forth, but it's really important to sort of, do those numbers yourself so you don't get caught up in the noise. Obviously seen a bounce back in the likes of PLS and Alchem in the last couple of days, but, it's swinging around 20% on a whim at the moment. But Mineral Resources is one that quite liking the look at the value there at the moment. Obviously being pinned down by the plummet in the lithium prices, and then obviously as the lithium prices have stabilised or slightly improved in China, then iron ore's sort of gone and hit those 5-month lows. So I think both of their businesses are very good. Their mining services business as well, enables it to spread its wings into all sorts of other other mines as well. So at the moment, it's most analysts are expecting this thing to double EPS and DPS for the next 2 years running. So I think it's had 3 upgrades, UBS, Macquarie and Morgans over the last couple of days, and it is presenting pretty good value there. And particularly that stake in Essential, I think it's Essential Metals, ESS, means they've now got 2 fairly significant lithium projects. But the other 2 are sort of much smaller cap. BKT, it's BlackRock Mining. Macquarie's initiated coverage on this. We've held this for a while. This is in that natural graphite space. So these are the sort of the forgotten about minerals apart from lithium. And there's actually more graphite in a lithium battery than there is lithium. And these guys have got the what will be the 4th largest deposit globally for natural flakes. So they've ticked all their boxes so far. They're on schedule. They've got a partnership with the Tanzanian government, which is an area which is politically stable on the east coast, which has further brought down their margins because it's enabled them to get rail and power. They've sold 80% of the mine and the first stage of production already, and POSCO's agreed to buy 32% of all offtake for the life of the mine, which is 26 years. It's quite a big project. So they're probably coming into production towards the end of this year, early next year. But
and they're well capitalised.
They're in the process at the moment of which is why the price is so depressed. Of securing their final financing for construction, but Macquarie's put a price target with 100%, 28 cents. It's around about the 14 mark at the moment, but they seem to have delivered the whole way along. And the last one's is one of the rare earths, which, looping back to Tesla, they announced they were going to remove the rare earths from their batteries. I think this is more out of concern about supply chain with China dominating. Myanmar and China are 90% of rare earths production, 99% of it's actually refined in China. So these guys are in Malawi, which is a neighbour of Tanzania, good port infrastructure, rail infrastructure, politically stable since the 60s, Commonwealth nation. So But these guys have got heavy rare earths, which is these permanent magnets, which, whilst Tesla's toying with the idea of using these ferrite-based batteries, their power-to-weight ratio is nowhere near as good, and that's so important with these vehicles because these companies are always constantly wanting to extend range. So I think if these battery manufacturers can get secure supply from projects like this, and there is a few projects popping up in Africa now with these rare earths, I think they'll be largely scrambling to get them because they have a technological advantage. And these heavy rare earths are their margins are they're 8 times the price of the light rare earths. They're very essential. Increases the density, increases the life of the battery, and also quickens the charging of them as well. So that one comes online late this quarter.
So
DY6, which is DY6 Metals. They've got 3 projects. They do have a smaller project in there as well, which has got copper, platinum, palladium, and nickel as well. But the main focus is the rare earths, and they'll have a pretty short turnaround for drilling results. So I think once the capital's raised, it goes immediately into drilling. They're ready to go, and you'll probably get a decent news cycle, fairly swiftly. So, 3 businesses that are at very different stages, but obviously all of them playing on some pretty large supply gaps that are probably going to materialise in the market. Particularly graphite. Graphite needs the most amount of mines out of any commodity at the moment to fill the supply gap, and you can't obviously, there may be a lot of lithium producers coming online, but without the graphite to make the batteries as well, they run into supply gap problems there anyway. So yeah, it's a little bit further down the battery production chain there, but they're 3 fairly decent opportunities. And rare earths has been pretty popular at the moment. China's got a history of stopping export, and it's seen prices spike pretty heavily outside of China for those commodities. So it might be right place, right time for that little IPO.
Interesting. And with all these names too, these stocks often get caught in the hype train when it rolls around and then eventually stops. Do you find these all decent valuations where they are now? They're not sort of caught in any sort of, again, hype cycle that means they might be a bit too expensive?
No, look, BKT particularly is in that orphan phase on the Lassonde curve, which is the mining cycle curve. So you'll look to, generally, you will look to see institutional investors start to wade in. That was why, with Macquarie initiating coverage, that was what twigged, for my mind, that there'll probably start to be increasing interest as it gets closer to production, and it'll start to lift up. This thing BKT comfortably traded in the 30s when it was hyped. Currently it's around about the 14-cent mark. So it's certainly not showing any massive overvaluation. DY6 is largely valued at shell price until the exploration results come out. So there are some neighbouring mines which have found some really good rare earths. LIN was one that is nearby, is a neighbouring tenement that's jumped 14 times. So it's one of those ones where obviously you manage your risk. You're not putting your whole portfolio into these things. You just go small, but right place. Good neighbours, good quality company. Good quality country in terms of stability, and a battery mineral that's going to be largely needed for supply gaps coming in somewhere around the 2030 mark.
Great.
Mark.
That was excellent. Great ideas. Always good to have an alternative to Tesla, isn't it? Because it is controversial, if nothing else.
It is, absolutely, and cars are a bit of a flippant industry. It's a bit particularly if the Mercedes and the Volkswagens and BMWs of the world start coming in and really getting their teeth stuck into the space. That high-end market is really almost an equivalent of a luxury brand. So whether Tesla still maintains their sales numbers when you can buy a Mercedes version of the same car. They have got a very limited product line, so which investors have been incredibly critical of. But in their defence, I think they've probably from start to finish, they've done it in a lot quicker time than any of those other car companies. So I think they're just probably trying to get those, that production really tied up and stable before they start adding a whole range of other cars to the range.
Well, hopefully, if all things go the right way, you'll be able to have an EV for every day of the week.
Not enough lithium in the world for that, apparently. So they tell me.
Yeah, Mark, really appreciate it. Mark Gardner there from Macro Capital.
Thank you, Mark.
Okay, well, let's push on and just have a look at what's happening overnight, because, well, the key macro news that I could find is the beige book, which if you're really wonky, gets is rather interesting. But I think the big news will be some of the US earnings. And, we are talking about Tesla extensively because the retail trader loves to, be exposed to or at least trade it, I can tell you that much. But a few other names in there too that might be quite interesting.
IBM, more a value play for lots of the investors. It actually was performing really well last year. I haven't checked it recently. Slight typo, we've got ASML, which is the huge...
That's the ticker there.
Oh, that's the ticker, is it?
Yeah.
Okay, sorry, apologies for that.
No, that's right.
The big Dutch company that was spun out of Philips basically produces all the machinery that creates the chips. So be interested to see how they're going. Morgan Stanley, pretty much an asset manager, again a big mover, and we've also got Abbott Laboratories and Airbus, and probably people will be looking to that to see how Boeing might do as well. So yep, more earnings.
More earnings. It shall be very interesting indeed. And going on to tomorrow, New Zealand CPI will be fascinating just on the basis of what it might mean for RBNZ policy, especially as we did see that UK CPI number, which interestingly enough, I have to say, we've just seen the pound pop, 30 pips, it has to be said initially, before giving all of that back, and is now lower than where it was prior to the move, which is actually interesting. I was talking to a few people today, in fact it was Peter Dragicevic from Corpay talking about a lot of these CPI releases are having these sort of perverse effects on currencies because it's raising the odds that central banks will have to hike into a recession. So maybe there's a dynamic there, but we'll wait for New Zealand CPI tomorrow to get a better feel on that. Okay, and let's just look at the leaders and laggards, starting of course with the leaders. And Telix, 2 days in a row, good news story. It's they're a good company doing good things, but a bit of actually a gold at the top of the market there once again. And we've been saying it, the only thing that really held up the whole market today, the material space, you can see it on the leaders there.
Absolutely, yep, gold's doing really well. Interestingly, the market really liked those AMP figures, so obviously the outflows haven't been as bad as expected, and I suspect there's some bottom fishing value investors looking in there, and Telix, of course, continuing to ride its highs.
Yeah, we'll see if they can continue to run, getting back close to that $10 per share level again. And we spoke about the corporate news of the day too, AMP. Talking about, well, I guess you'd say worse than expected outflow.
Better than expected. So basically the net outflows were 600 million in the March quarter, down from 900 million in the previous corresponding period. And the assets under management, they actually increased by 2 billion to 126 billion. So, if the new CEO can actually turn AMP around, that would be something, because it really has been, it's often touted as the worst long-term, disaster stock on the ASX when you're discussing, unfortunate bad investments.
Yeah, well, we talk about the sort of confidence element of financial markets, and still haven't recovered from the disastrous findings that came out of the Royal Commission.
It's been multiple bad acquisitions, everything. It has been totally the wealth destructor. But yeah, exactly. New minds, new investors, and you probably look at it without the muscle memory of the past.
Yeah, okay. Well, let's go on to the laggards now and have a look at what's there. And Star Entertainment, another one that continues to disappoint investors. And well, I suppose we're talking about, and I hope Mark doesn't mind me stealing the Bulls, the Bears, and the board for our COB title. They'll have to get the paperwork drawn up before we get him to leave the office. But maybe if you are looking for a punt rather than the ASX, Star Entertainment, you can do it there because they're struggling, obviously, with attracting people to the casinos.
Yeah, downgraded the earnings to between 280 million to 310 million. Barrenjoey's in there to strip out lots of fees. And basically, they didn't listen to the regulators. The regulators warned them, and they're coming in and they're suffering the consequences. Interesting, NextDC's been on a tear of a run and had a really, really, good announcement with a new client. So obviously the profit taking's moving into that one. I did see Goldman Sachs came out today with a preferred buy on REA over Domain. I'm not aware of any other news, but maybe some people doing some selling off the back of that. And Lake Resources had also been really, really firm, so some profit taking coming in there.
Yeah, and we have been seeing a lot of those kind of plays on the leaders or laggards list over the last few days. We spoke extensively yesterday, didn't we, about those that like to get caught in, I suppose, the excitement of short-term traders, especially in thin markets. But let's get to our favourite part of the episode where we learn about half a dozen new companies. EML Payments, and it was the new CEO, wasn't it? That sort of shifted through.
So they've got a activist investor on the board, and the CEO that had been there for 10 months, she has left, and they've got an interim CEO in there. They're basically saying they're cutting costs. Some of the business units are, open to be divested. So investors taking heart. That has been a really, really painful stock for investors. And that is where my information sort of, starts and finishes. Rumble Resources, Lithium Power International. I'm not across these stocks, but some nice double-digit gains.
Yeah, Hot Chili, I don't know, agriculture. Maybe
Hot Chili.
Is that the name of Carolina's new app? I'm not too sure. But,
for her tequila.
For the tequila. Let's look at the laggards now, and that keeps popping up at the top there, the energy resources. We'll have to look into that, because that was double days of fat fingers. But as you can see there, we won't go through them too extensively. Atlantic Lithium, it tells you the story, just punters out there having a go on a couple of lithium stocks. But that will do it for the small caps, I think. But and I think, fair to say, that'll do it for the day. We'll have plenty to go through tomorrow morning with Tesla's results.
Yes.
But for now, I might get a final market check just on where the ASX 200 did close. Do we know where the auction settled?
I have it 7,365, which is up 5.3 points. As I said, pretty much on life support today, not much happening.
No, yeah, and we tried to add as much hype and interest to that as possible, but it was a pretty neutral day. But,
well, it is holidays at the moment. Everyone's on school holidays. Anzac Day coming up.
Yes, but we'll still be there, and we'll be with you tomorrow morning, of course. Make sure you get across everything that you need to know on our website and for all the news and views, of course. But have a great evening. We'll see you tomorrow morning.
Cheers.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.